Magandang araw, future CPAs. We are the presenters from Accountaholics, and today we will tackle about income taxes. Here's the coverage or table of contents na mapag-aaralan natin about sa income tax. Nature of income taxes. Ang income taxes ay normally treated as a cost of doing business. Taxable income ay nasusukat in accordance of tax law. Take note of this, and accounting income naman ay nasusukat in accordance of financial accounting. Why? Kasi ang tax laws and financial accounting ay pwede magkaiba. Ang tinutukoy sa IAS 12, ang recognition ng deferred tax liability is nag-a-arise from temporary difference. Later, you will about to know ano nga ba ang temporary differences. Next is current tax liabilities and current tax assets. I-recognize siya as liabilities if ang current tax for current and prior periods ay hindi pa rin bayad. Marirecognize naman siya as asset if bayad na and nag-exceed pa sa amount of due ng period na yon. Deferred tax liabilities, respect of taxable temporary differences, deferred tax assets, respect of deductible temporary differences, the carrying forward of unused tax losses, and the carry forward on unused tax credits. Temporary differences between the carrying amount of an asset or liability in the statement of financial position and its tax base. Taxable temporary differences minus future taxable amount. Deductible temporary differences minus future deductible amount. Financial income o accounting profit is greater than relaxable income o taxable profit. Carrying amount of an asset is greater than its tax base. Carrying amount of liability is less than its tax base. Financial income subject to income tax, 2,920,000 pesos minus deduct excess of deductive expense over book expense, 240,000 is equal to taxable income, 2,860,000. Para makuha yung total na 240,000, ay pinag-minus yung depreciation of equipment na 360,000 sa 660,000. Future taxable amount or FTA, assume further that nor payment nor accrual of income taxes was made during the year. Income taxes of 2010 is recorded as follows. Income tax expense, current, 804,000. Income tax payable, 804,000. Para makuha yung total na 804,000 ay yung taxable income na 2,860,000 ay multiplied lang siya sa tax rate na 30%. Income tax expense, deferred, 72,000. Deferred tax liability, 72,000. Para makuha yung total na 72,000 ay yung total ng deductible expense na nakuha natin kanina, multiplied lang siya sa tax rate na 30%. For example, assume that a corporation has pre-tax financial income of 2,920,000. Meanwhile, the taxable income included rent revenue, 500,000 collected in advance. This amount represents the first quarter rent of the year 2011, assume our tax rate of 30%. Financial income subject to income tax, 2,920,000, add excess of taxable overbook revenue, 500,000 is equal to taxable income, 3,420,000. Assume further that no payment non-accrual of income tax was made during the year. Income tax for 2010 is recorded as follow. Tax expense, current, 1,026,000. Income tax benefit, 1,026,000. To compute the total of 1,026,000 is the total income na 3,420,000 multiplied siya sa 30%. Deferred tax asset, 150,000. Income tax benefit, 150,000. To compute the total of 150,000 is, yung total ng rent revenue na 500,000 is multiplied lang siya sa tax rate na 30%. Yung income tax expense is equal to current tax expense minus income tax benefit. Income tax expense is equal to 1,026,000 minus 150,000 is equal to 876,000. Or pwede ding yung 30% ng financial income multiplied siya sa income tax. Income tax expense is equal to 30% times 2,920,000 is equal to 876,000. IAS 12 income taxes requires the carrying amount of defined tax asset be reviewed at the end of each reporting date. An enterprise should reduce the carrying amount of deferred tax asset to the extent that it is no longer probable that sufficient tax profit will be available to allow the benefit of part or all the deferred tax asset to be utilized. The following summary may facilitate determining the future taxable amount, leading to recognition of deferred tax liability or future deductible amount, leading to recognition of deferred tax asset. FTA financial income is greater than taxable income, or carrying amount of an asset is greater than tax base for an asset, or carrying amount of liability is less than tax base for an asset. FDA financial income is less than taxable income, or carrying amount of an asset is less than tax base of an asset, or carrying amount of a liability is greater than tax base of an asset. Deferred tax asset and deferred tax liability. To illustrate, a corporation has pre-tax financial of 1,200,000 and taxable income of 900,000. The difference was attributable to the following. During the year from settlement of the life insurance of the president who died on July 1, 2010 was recognized in the books in the amount of 650,000. Included income, the determination of pre-tax financial income is charitable contributions in excess of the 350,000. Premium paid on the life insurance of the president during the first half of the year of 25,000 and fines and penalties paid the company in the amount of 75,000. Tax depreciation is 100,000 greater than book depreciation. Rent collected in advance, 50,000 reported as revenue for tax purpose but not recognized for financial accounting purposes. Warranty provision of 80,000 accrued in the books but not recognized for tax purpose until paid. Reconciliation in financial income and taxable income is presented below. Pre-tax financial income is 1,200,000. Non-deductible expenses, charitable contribution in excess of the amount allowed is 350,000. Premiums paid on the life insurance is 25,000. Fine and penalties is 75,000 is equal to 450,000. Non-taxable revenue. Gain from settlement of the life insurance, 650,000. Financial income subject to income tax, 1 million. Future taxable amount. Tax depreciation in excess of book depreciation is 200,000. Future deductive amount. Rent collected in advance, 50,000. Warranty provision, 80,000 is equal to 130,000. So the taxable income is 930,000. Assuming that neither payment nor accrual of income tax was made during the year and a tax rate 30%, the journal entries to record the income tax are as follows. Based on taxable income, income tax expense, current, 279,000. Income tax liability, 279,000. To compute the total of 279,000, the taxable income of 930,000 multiplied sa tax rate na 30%. Based on future taxable amount, income tax expense deferred 60,000, deferred tax liability 60,000. To compute the total of 60,000, the future taxable amount 200,000 multiplied sa tax rate na 30%. To compute the total of 39,000, the future deductible amount 130,000 multiplied sa tax rate na 30%. Income tax expense is equal to 279,000 plus 21,000. Total of 300,000. 1 million times 30% is equal to 300,000.
Reversal of temporary difference. When the temporary difference, the future taxable amount computed in the period of origin becomes taxable, and the future deductible amount computed in the period of origin becomes deductible. Meaning, yung mga panandali ang pagkakaiba at pagtutugma ng nakakompute sa financial income at taxable income na makikita ay babaliktad at magtutugma din ulit sa mga susunod na taon. Ito ang dahilan kaya tinatawag siyang temporary difference. Example for initial recognition and reversal of tax liability. An equipment costing 1.8 with no residual value and acquired on January 1, 2010 is being depreciated using straight line method for income tax purposes. The financial income of the company for years 2010, 2011, 2012, 2013, and 2014 are as follows: 1.4 million, 1.5 million, 1.6 million, 1.7 million, and 1.8 million respectively. No permanent difference exists between financial income and taxable income, and the difference in depreciation is the only temporary difference. Assume the tax rate for all years is 30%. So, makikita natin sa table dahil magkaiba ang paraan ng accounting at ng tax kung paano mag-depreciate ng PPE sa accounting books ng company ay ginamit ang straight line method habang para naman sa income tax ay sum of the years methods ang ginamit. Ito ang dahilan kaya hindi maiiwasan na magkaroon ng pagkakaiba sa mga value ng depreciation expense na makakompute natin. Pero kahit nakita natin na kahit sa mga naunang taon ay mas mababa yung recognition sa accounting kaysa sa tax, mapapansin natin na habang tumatakbo ang taon, nagre-reverse ang mga pagkakaiba nito. Comparison of the carrying amounts of the equipment and the tax basis at the end of each year. At dahil nga iba ang nag-compute nating depreciation expense, magkaiba ang lalabas na carrying amount at tax base na lalabas sa carrying amount ng libro at magiging tax base natin. Ito naman yung computation of taxable income for years through 2010 hanggang 2014. Dito naman, ginawa natin yung financial income na dinerive natin sa example ay binawasan o dinagdagan natin galing doon sa pagkakaiba ng depreciation na nasa nakaraang table. Ginagawa natin ito dahil dapat i-reconcile ang pagkakaiba ng financial income at taxable income para siguradong tama pa rin ang buwis na binabayaran kahit magkaiba ang paraan ng pagde-depreciate. The pertinent entries are as follows. December 31, 2010, debit, income tax expense current, 348,000. Credit, income tax payable, 348,000. Debit, income tax expense deferred, 72,000. Credit, deferred tax liability, 72,000. Sa December 31, 2011, ang debit natin is income tax expense current, 414,000. Credit natin, income tax payable, 414,000. Nakuha to pag pinag-times yung 1,380,000 times 30%. Next naman is debit, income tax expense deferred, 36,000. And credit, deferred tax liability, 36,000. Sa year 2012 naman, income tax current debit 480,000. Credit income tax payable 480,000. Makuha naman to kapag pinag-times ang 1.6 million times 30%. Sa year 2013, ang debit natin is income tax expense current 546,000 while ang credit natin is income tax payable 546,000. Makuha natin to kapag pinag-times natin yung 1,820,000 times 30%. Debit pa natin is deferred tax liability na 36,000 and credit income tax benefit 36,000. Year 2014, income tax expense current debit 612,000 and credit income tax payable 612,000. Nakuha natin to kapag pinag-times natin yung 2,040,000 times 30%. And deferred tax liability debit 72,000 and income tax benefit deferred 72,000. At December 13, 2014, yung carrying amount at tax base ay parehas na 0. At maobserbahan natin sa mga entry na nagkaroon ng deferred tax liability early on, pero at the end, nag-reverse ng tuluyan ang deferred tax liability. Computation of deferred tax based on the difference between the book basis and tax basis as assets and liabilities. Sa IAS 12, gumamit sila ng balance sheet approach para i-measure ang deferred tax asset at liability. Accounting for deferred tax involves the following procedure. Number 1. Determine the difference between the tax and book basis of assets and liability. Identify those that are temporary difference. If the difference is a debit on the statement of financial position, then the difference is future taxable amount. Example nito is prepaid expense, accrued income. And if the difference is a credit on the statement of financial position, then the difference is future deductible amount. Example naman ito is yung mga allowance for bad debts, accrued warranty costs, and unearned revenue. Number 2, measure the required balance of deferred tax asset and deferred tax liability by applying the applicable tax rates to the temporary difference. Number 3, deduct the beginning balance of the deferred tax asset and deferred tax liability from their respective required balance and the record of the changes accordingly. Number 4, the net changes in the deferred tax liability plus or minus the net difference in deferred tax is the deferred tax that forms part of the income tax expense or benefit for the current period. Ang next natin is operating loss carry forward. Ano nga ba ang operating loss carry forward? Ang operating loss carry forward is an excess tax reduction over gross income in a year that may be carried forward to reduce taxable income in a future year. Nakakatulong to para sa isang business na nalulugi or nag-net loss in a year para maari silang magbayad ng tax sa susunod na taon saka dahilan ng nalugi ito na isang taon. Maaari ring i-tax ang business sa kakayahan nitong makapagbayad ng tax base sa profit ng business. In this case, pinapakita na ang tax code natin is neutral. Ang deferred tax sa asset is recognized for unused tax carry forward or unused tax credit if and only if it is considered probable that there will be sufficient future taxable profit against which the loss or credit carry forwards can be utilized. Meaning to, the following formula can be used in the calculation of deferred tax arising from unused tax losses or unused tax credits. Deferred tax assets is equals to unused tax loss or unused tax credit multiplied by tax rates. To illustrate, assume that the DEF company reports in its 2010 income tax return an operating loss of 1 million. It is expected that for the next 3 years, the company's operation will result to its cumulative taxable profit of more than 1 million. Thus, it is believed that the 1 million loss in 2010 may be deducted from taxable income during the next 3 years. A deferred tax asset of 300,000 will be recognized assuming that the tax rate is 30%. So, the tax loss is 1 million multiplied by tax rate, which is 30%, is equal to 300,000, the deferred tax asset. Ang debit natin dito is deferred tax asset, 300,000, and credit income tax benefits, 300,000. Next naman is financial statement presentation and classification. Yung tax asset, tax liability, kailangan nakabukod sila sa ibang asset at sa liability statement of financial position. Yung deferred tax at liabilities, kailangan mahiwalay sa ibang asset para malaman yung pinagkaiba nila sa kung ito ba ay current tax asset and liabilities. Diba hinihiwalay ng isang company or enterprise ang pagkakaiba ng current tax asset and liabilities sa financial statement upang hindi ito masama sa deferred tax asset as current asset. An enterprise should offset current tax asset and current tax liabilities if and only if the enterprise has a legal enforceable right to set off the recognized amounts and intends either to settle on a net basis or to realize the asset and settle the liability simultaneously. An enterprise should offset deferred tax asset and deferred tax liabilities if and only if the enterprise has a legal enforceable right to set off current tax assets against current tax liabilities, and the deferred tax assets and the deferred tax liabilities relate to income taxes levied by the same taxation authority on either. And the same taxable entity or different taxable entities which intend either to settle current tax liabilities and asset on a net basis, or to realize the asset and settle the liabilities simultaneously in each future period in which significant amount of deferred tax liabilities or asset are expected to be settled or recovered. Next naman, sa disclosure requirements, the major components of tax expense should be disclosed separately. Components of tax expense may include A. Current income tax expense. B. Any adjustment recognized in the period for current tax of prior periods. The amount of deferred tax expense relating to the origin and reversal of temporary difference. Next, the amount of deferred tax expense relating to changes in tax rates or the imposition of new taxes. And the amount of the benefit arising from previously unrecognized tax loss, tax credit, or temporary difference of a prior period that is used to reduce current tax expense. Also, the amount of the benefit from previous unrecognized tax loss, tax credit, or temporary difference of a prior period that is used to reduce deferred tax expense. Lastly, deferred tax expense arising from the write-down or reversal of a previous write-down of a deferred tax asset. Number 2, the following should also be disclosed separately. Letter A, the aggregate, current, and deferred tax relating to items that are charged or credited to equity. B, an explanation of the relationship between tax expense and accounting profit in either or both of the following forms. Yung isang form is yung numerical reconciliation between tax expense and the product of accounting profit multiplied by the applicable tax rates. disclosing also the basis on which the applicable tax rates is computed. Yung isa naman is a numerical reconciliation between the average effective tax rates and the applicable tax rates, disclosing also the basis on which the applicable tax rates is computed. Letter C. An explanation of changes in the applicable tax rates compared to the previous accounting period. Next, the amount and expiry dates, if any, of deductible temporary difference, unused tax losses, and unused tax credit for which no deferred tax is recognized in the statement of financial position. The aggregate amount of temporary difference associated with investment in subsidiaries, branches, and associates, and interest in joint ventures for which deferred tax liabilities have not been recognized. Letter F. In respect of each type of temporary difference and in respect of each type of unused tax loss and unused tax credits. Ang isa dito is the amount of deferred tax assets and liabilities recognized in the statement of financial position for each period presented. Also, yung amount of deferred tax income or expense recognized in the income statement if this is not apparent from the changes in the amount recognized in the statement of financial position. And also letter G. In respect of discontinued operation, the tax expense relating to isa is the gain or loss on discontinuance, and yung pangalawa, the profit or loss of the discontinued operation for the period together with the corresponding amount for each prior period presented. Letter H. The amount of income tax consequence of dividends to shareholders of the enterprise that were proposed or declared before the financial statement were authorized for issue but are not recognized as a liability in the financial statement. Number 3. An enterprise should disclose the amount of a deferred tax asset and the nature of the evidence supporting its recognition when, letter A, the utilization of tax-deferred asset is dependent on a future taxable profit in excess of the profit arising the reversal of existing taxable temporary difference, and letter B, the enterprise has suffered a loss in either the current or preceding period in a tax jurisdiction to which the deferred tax asset relates. And that's all for topic Income Taxes Intermediate Accounting 2. Thank you for watching.